Welcome, everyone. Welcome to TakeStock Live, every Wednesday, 15 minutes after market close. We're well into the second season now, which should run every Wednesday through into October, maybe even a little bit beyond. Next week, we are looking forward to welcoming CHF Capital Markets back with three companies that had presented in the first season. It's going to be a tech session, HS, BIS, and VSBY next week. We'd like to thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to thank our sponsors for their vital support: Fasken, MNP, Lee Jones Gable, Olympia Trust, and the CSE, who helped us launch the forum back in 2014. We'd also like to thank our extended network for their support in launching this initiative. Thank you to Calgary Meg, to CIM, to the Manitoba, Saskatchewan prospectors and developers, and to many others. Thank you also to Investmentpitch Media and the Newswire for helping us get the word out. At this point, I will hand over to my colleague, Mark Francis. Take it away, Mark.
Thank you, Raj, and welcome all of you, our attendees and guest presenters. Some housekeeping matters. First of all, our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TakeStock, and TakeStock and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. You will note a red Reconnect tab at the top of your screen. If you lose audio, just click it and you will be reconnected. Normally we run just under 45 minutes, but might run a little longer today with technical questions at the additional technical questions at the very end. The Q&A panel portion, we will allow the chat board to be utilized in this session. Please be clear about to whom your question is addressed and use the chat board for serious investor and technical questions. Today we have three VMS companies at various stages of the exploration and development cycle. Each company will have a presentation with their PowerPoint, followed by a panel discussion with Q&A, led by Al Turner, PGO. Each presentation will be 6 minutes and 30 seconds, and you'll see me come on just about 30 seconds before the end of their time. We encourage you to do due diligence. Go to SEDAR, look at the information circulars, look at the audited financial statements, look at the disclosure, and connect with the companies directly in order to get detailed information. Contact details for the presenters can be found on our website, takestocklive.com. So today we are pleased to have Alistair Ross, CEO of Rockcliff Metals, RCLF on the CSE, Ron Little, CEO of Wolfden Resources, WLF on the TSXV, and Max Porterfield, CEO of Callinex Resources, CNX on the TSXV. So we're going to start with Alistair Ross of Rockcliff. Alistair is a leader in the mining industry, known for mentoring the development of true leadership potential within individuals and organizations. Before joining Rockcliff, Alistair was the head of mining and milling for Vale's North Atlantic base metals operations and ran his own consultancy business. Alistair's career in mining has spanned 6 countries across the globe, including serving as president of Lonmin's South Africa operations, producer in many years at the former Inco's Canadian operations as general manager of areas including mining, milling, smelting, and copper refining. Take it away, Alistair.
Thanks very much, Mark. Good afternoon, everyone. I'll take my face off here and get you focused on what's more important. Where's Rockcliff at the moment? Don't need to go through the disclaimers. Mark's done that, but same advice, do your DD. Who are Rockcliff? We've got a very good team in place now on the management side. We've got experienced project management in the form of Micromaniac, who's built projects around the world. Ken Lapierre, who's stomped through the backwoods of Snow Lake for 15 years now and is coming up with some very interesting properties. And our CFO, Chris Stackhouse, was part of the integral team that built Guyana Gold in the early phases out there. So a lot of experience in building stuff. Yeah. The key strategy for us is around a leased mill at Wolfden in northern Manitoba. That leased mill actually gives us a huge advantage in a number of fronts. Around permitting, of course, an expensive building mill, and all the different properties we look at, we're targeting productions potentially around 2022, depending on our engineering studies that are currently underway. And because of the relatively small size of the deposits, what we're looking at on a mine plan side is how do we reuse maximum capital, therefore have very small openings, try not to use shafts, use ramp development because they're shallow deposits, etc. And we got a big land package, which we'll take a look at in a minute. Where are we currently? We've got plenty of dollars, I think, in the bank for us to finish off our exploration and engineering studies at the level of our PEA and beyond. We've got about 307 million shares outstanding. We just had a whole bunch of warrants expire, so they're down to very little now. And so, it's pretty hefty share outstanding, but it seems under control considering we don't need to raise money prior to construction at this point, depending on what our next phase engineering studies go. We've got a large internal shareholding, if you like, between Greenstone and Novista. They're the primary owners that put the current look Rockcliff together, with Novista providing the two properties of Talbot and Tower and the lease on the Bucko mill, and Greenstone providing the cash that we've been spending up until now. So big insider holding there, plus management, of course. Got a big ESG statement. I don't want to spend a long time on this, but you're going to see in our design for our operations how at the design phase we're building in these principles, and it's shaping how the operations will look, what the costs look like, and the level of involvement with local communities, both where we're headquartered in Sudbury in Ontario, and where the mine sites and mill site would be in Manitoba. So we're pretty proud of that, and we're enjoying the steps that these principles are guiding us on. The land package that I mentioned, on the left-hand side of this chart, you'll find the Flin Flon mining camp, and of course Hud Bay being there, it seems like forever now. They're centered currently mainly around the Snow Lake area, which is towards the center of the map, that little green area surrounded by all the purple. The purple is the Rockcliff position. And we got a lot below limestone cover. That red line that runs across the middle of the map is roughly where the limestone begins and ends, spreading down towards Winnipeg in the south, gets thicker and thicker limestone, and there's no limestone to the north of that. All our deposits are primarily high-grade copper in the sort of 3% type range and above on copper equivalents. And our drill program to date has been largely focused on growing resources to get towards a potential production decision, rather than trying to find some new stuff. And we've shared those results recently, but I think more importantly, we'll show you what it's beginning to show up like for us on our studies. The Bucko mill, we've obviously done a fair amount of work trying to understand what would take it to turn it from a past nickel producer to a future copper producer, and be prepared to share some more about that if we have time. And then the Tower deposit, that's shown up as a pretty decent high grade. Last resource we published on that showed about a 5% copper equivalent on there. Once again, narrow vein, steeply dipping ore body there. And the rail deposit we've drilled out to about 2 million tons now. It's sitting at about 3.7% copper equivalent. Both those properties have exploration upside on them. And then there's the Copperman that's also of interest to us. We just haven't got to it yet. That is a historical resource of about 250,000 tons, around the 5%, 5.5% copper equivalents. For us to start getting into production, we've got to find a way to mine narrow vein, steeply dipping ore bodies cheaply and capital effectively. And some of the design principles, I won't go through them all here, that actually are guiding us is that rather than, if we look around quality, rather than trying to target low dilution with a potential low ore body recovery by leaving lots of pillars, etc., but that way you control rock falling in the stopes, is we're coming up with solutions that says, can you maximize recovery of the resource and absorb a higher dilution by having a very cost-effective way to manage that dilution? So almost the opposite thought pattern from a traditional narrow vein steeply dipping ore body. We're throwing a lot of technology at this because we believe we've got an excellent opportunity with a brand new mine to integrate technology right from the beginning. And we'll share some of those results with you just now. Our first pass at a mine plan that we envisage being part of our PEA that'll come out in the not too distant future would be using railware and mining these long ore bodies that are narrow vein steeply dipping. And the benefits that we're going to see from technology is by putting battery electric fleet in, is that ventilation gets reduced by 50% on horsepower. So we're not consuming that much energy on wasted energy, if you like, by throwing hot air down a mine and exhausting it. The other benefits we've seen is the use of tele-remote and autonomous actually allows us to put less people on a fly-in, fly-out rotation, bring the cost down, and actually run it from a central control room. We're envisaging back in Sudbury at this pace. And then some of the other design features are clearly around safety, no raises, so nobody falling down open holes, and clean air from no diesel emissions. Bucko mill's looking great from being transitioned from from nickel to copper. And I think, Mark, I'm at 6.5 minutes.
Yes, I let you have a little more, Alistair.
Oh,
Thank
okay.
you very much. Much appreciated. And now Ron Little. Mr. Little is an engineer, geologist, and entrepreneur who has developed mining projects in Canada, South America, and Africa. He was the founder and CEO of Orezone Resources and Orezone Gold Corp, and for over 20 years built one of the most successful exploration and mine development track records in Burkina Faso. He is a director and advisor to other public companies and not-for-profit entities. Mr. Little is a professional engineer and holds a Bachelor of Science in Engineering, Geological from Queen's University in Kingston, 1985. Ron, over to you.
Okay, sorry about that. It seems like I've only got 5 minutes left now.
No, you're fine. See you.
So this slide you're looking at here is really part of our bold statement. We've got really the highest grade undeveloped VMS deposit in North America, certainly in the States, that has any chance of being developed, in our opinion, in the next 5 to 10 years. It's an extension of the Bathurst camp down in New Brunswick, and the mineralogy you see here is a little coarser grained, which should lead to better recoveries. But let's explore this bold high grade statement. The Pickett Mountain deposit in Maine was drilled off by Getty Oil, or found by them back in the 80s. And at a 9% cutoff grade, it's got 10% zinc, 4 lead, 1.5 copper, about 100 grams of silver, and 1 gram of gold. But for those that are still, in the gold space and euphoria, if you look at the chart at the bottom, we've done some equivalencies in many different mineralogies that we have here. So we've got about 4 million tons of indicated and inferred, so 2 of each at about 20% zinc. But that comes out to about 1.5 million ounces of gold at about 11 grams per ton. And that's a bit of a segue why we've got Kinross as a strategic investor in this company, because it's a compact, narrow underground ore body that's going to be a high profit, high margin operation. And that will attract in any, serious mining company. If you look at the breakdown of metals, we're at a current value of about $550 a ton, and our estimate is we can, mine and process this for under $200 a ton. And that should come out in a PEA in the next week and a half. If we look at our peer group, we stand on the far left of this chart. These are all sort of the junior names in our space that have any kind of zinc equivalent. And unfortunately, we don't have Callinex in this chart, and we will get you in there. So You know, the blue number is the high grade equivalency at over 20%. The dashed line of 10% is where sort of the mean is. And everybody out there thinks you need 10 million tons at 10% zinc. And we're sitting at, you know, I think in the PEA we'll show about 5 million tons at about 17% zinc equivalent, which puts us, you know, ahead and above others, but very close to Nord Zinc. And the difference there is that we're just off the highway. There's power, there's water, there's a town nearby. So, you know, infrastructure wise, we're in a different regime and far lower cost because of it. So again, we've already got the makings of a small mine, but don't let me cloud you with the development side of the story. You know, we're all about exploration, trying to show this is a much bigger deposit. So we're the first guys back in Maine since the new mining code in 2017. And most importantly, under the new mining code, they streamlined the ability to get to a mining permit. We think this will be 3 to 4 years in total time. We're already 1 year in, almost into the rezoning side, which is phase 1. They did eliminate all the requirements for exploration permits, so we can drill and do geophysics and not require permits like most places in Canada. We don't see any requirement from federal government, from the Army Corps. There's no Indigenous issues here. So we see it much easier here than in Canada. And we do own the property. We own the land, the access, the timber, which we've sold off 3 million this year of our timber just to pay for the drill program without issuing a share. And, you know, I'll flip to what the, you know, the upside is here. We're in the camp that runs right from Newfoundland through to New Hampshire. It's a 500 million year old package of volcanic rocks. And the analog is actually Buchan's in Newfoundland, where they had 16 million tons of 25% zinc equivalent. And they had 7 lenses. We've only found 2 to date. So each lens is about 2 million tons, which is a real analog to what we have at Picket Mountain. And that's what we're trying to identify now is, you know, 1 or more lenses in our upcoming drill program. The next slide shows you the permit that we own. So we own 7,000 acres and we've got very good local support. The whole community is all based on the timber industry, and I couldn't come up with a better group of people to turn into miners. And the area is really, you know, supportive of us because they're all looking for jobs. It's the timber business and the pulp and paper has slowed down considerably in Maine. So we're sitting in a 30-kilometer belt. We're still the only ones. We're optioning ground as we speak from our neighbors who are mostly lumber companies, and we flew the whole package with airborne. So we're already doing due diligence on targets that are outside of our land package, and we will be making some news about more ground and targets to drill coming up fairly soon. If we look at the geology of the property, we're now down to kilometer scale. So the main ore body, the 2 lenses, is the yellow line, which is about 1 kilometer long, and the red ellipses are targets that we've identified through airborne and through ground HLEM, you know, basically conductors that we think have potential extensions. And the felsic rocks are the pink to flesh colored rocks, and along the edges of those could be any other lens of massive sulfide. So the first 7 holes that we've drilled here in the last month and a half, 3 of them have hit massive sulfide. The other 4 we've hit either faults or diked out or hit porphyries. So we're not seeing a massive lens, but that was to be expected as we test our model. And it's all about, you know, right now finding out the architecture of the basin so we can find out more lenses. PX1, we hit 200 meters of great looking felsic rock. And of course, we think we can find more there when we go drill it. So to sum it up, we're fully funded. The PEA should come out in the next week and a half. And we're also securing other high-grade projects in the area. You know, stay tuned for more announcements, but stay tuned for more drill results that'll be coming in the next couple of weeks as well. Thanks very much.
Excellent, Ron. And closing up the formal presentations, we have Max Porterfield of Callinex. Max has over 10 years of experience in natural resources and financial markets, previously with Brazil Resources, Inc., Uranium Energy Corp., and U.S. Global Investors. He is a graduate of Texas Tech University with a bachelor's degree in business administration. So Max, over to you.
All right, thanks again. I'm Max Porterfield. I'm president and CEO of Callinex Mines. We are a purpose-based exploration company focused on base and precious metals exploration across 3 Canadian mining jurisdictions. The focus of the company in 2020 is to discover 3 mines in 3 camps in 3 kind of unique ways across the portfolio, and we're going to go over that today. In terms of structure, we've recently consolidated the company's share structure last year. We've only got 11 million shares outstanding. Of that, myself and my family are the largest group of shareholders. I personally own 4%. The rest of my family owns roughly 12%. None of the large investors, resource capital funds, that own roughly 8%. So it is very, very tightly held. Our burn's exceptionally low, between $40,000 to $50,000 a month, notwithstanding any exploration costs. And again, we've roughly got a $33 million market cap, and we'll have another $600,000 in warrants that are struck at $1 a share. So there will be some warrants coming down between now and the very near future. And in terms of our technical team, aside from myself, our technical team has been associated with numerous world-class discoveries. In particular, they've been credited with the discovery of 3 of the 4 largest mines in the Flin Flon camp's history, with the exception of the original Flin Flon ore body. There's 2 Bill Dennis Award winners between Jim Pickell and Alan Vowles. Maslowski is a member of the Canadian Mining Hall of Fame. And then J.J. O'Donnell is a former VP exploration for the Howard's Pass zinc project in the Yukon and former mine manager of the 777 mine. So the first set of exploration results we're going to go over is our operations in Bathurst, New Brunswick, where we have our Nash Creek project as our flagship property, as you can see to the north. Nash Creek benefits from some tremendous infrastructure, being located 25 kilometers away from a deep water port, lead smelter that's actually looking to be shut down, rail line that goes to zinc smelting operations in Quebec, as well as a power station to provide power. It also sits along the provincial highway, so you have great access. Nash Creek itself, we published a maiden PEA on the property in 2018. It was a resource that we acquired again in 2016. We were able to double the deposit size through regional exploration, and then published a maiden PEA at $1 when zinc was at $1.60 a pound before it fell to 90 cents a pound within about 3 months' time. With that being said, we've done some regional exploration, and this is just kind of a quick overview. But we did regional exploration, and the big highlights are that we hit 2 silver-rich discoveries over 6.8 kilometers apart along this felsic-mafic rock contact that you can see on the slide there. And again, what's very unique about it is that, again, Nash Creek's a maiden stage. A maiden PEA was published in 2018, showed decent economics at today's zinc price environment. I do believe that zinc prices are poised to head higher in the future. And then the 2 discovery holes are over 90% silver, again, along this main controlling 18-kilometer fault. So what we're doing in the meantime now, to follow up to this, is we're doing a soil sampling campaign to cover the 306 hole to the south, the first silver intercept, and then going all the way to the north to the 313 hole, which is the second silver discovery. And again, there's been no drilling along that main controlling fault ever in history based on our historic drill database. The Nash Creek deposit itself sits on a set of splay faults where the bulk of exploration historically has been done. So again, we're going to have soil sampling results coming out, and then there'll be a follow-up drilling campaign in New Brunswick to delineate and target additional silver mineralization along that main controlling fault in New Brunswick. Jumping over to Flin Flon. Flin Flon is a very exciting story for us. It's an area that obviously we've got a lot of expertise in historically from finding the major discoveries there, like I mentioned before. And again, in terms of the situation in New Brunswick, you had over 20+% employment rate. In Flin Flon, you've got a very similar situation with the flagship 777 mine due to shut down in Q2 2022. Our land package is the second largest land package in the immediate Flin Flon camp outside of Hud Bay. And we've been focusing our exploration over here on the Pine Bay project. And the reason for that is the Pine Bay project encompasses the largest felsic volcanic rock package in the entire belt. And the importance of that is that 90% of all the ore ever mined in Flin Flon's history has been hosted in the felsic. That, coupled with a very large alteration zone map at surface, has led a lot of other previous explorers to have exceptionally large exploration targets on the area. For example, Plasterdome had a 30 million ton exploration target when they explored the property area in the early 1990s. With that being said, we just actually announced a discovery this morning. I'm very, very excited. This is a culmination of about 5 years of work on the property. But essentially, we've made a discovery we call the Rainbow Discovery that you can see in this paleo fault corridor to the north there. And I don't have a way to show you with the cursor, I don't believe, but that discovery sits at an inflection point between a known mine horizon, the Centennial Mine that hosts our sourdough deposit to the south, as well as the Centennial Mine, and where this growth fault corridor connects with these other adjacent mines and deposits that have either historically been in operation or they're known deposits. And we were testing this most recent drilling campaign, and the discovery that we announced this morning was a very large off-hole electromagnetic anomaly that was situated on that known mine horizon. We discovered this anomaly by just testing IP chargeability anomalies in the area earlier this year, and then the EM probe provided a vector towards this conductive source. And we were able to announce that there's 2 mineralized intersections rich in copper, gold, silver, and zinc. And again, over mineable widths, and then subsequent borehole electromagnetic surveys that we've announced in this morning's release shows a very, very large off-hole anomaly to the north that we're immediately drill testing. Mark, do I have a couple more seconds, or?
5 more.
Five more?
I've let you run over, so you move to your close.
Sorry, 6 minutes is quick. But essentially, we've got numerous discoveries across the portfolio in New Brunswick, now in Flin Flon, and we have an updated resource. It's a gold, copper, zinc resource near surface in Buckins, and we're very excited about it as we advance these things in 2020.
Very good. Thank you, Max. And now we will also bring Alistair and Ron back on for the panel Q&A portion, moderated by a great supporter of this investor forum, Al Turner, PGO, president of the Calgary Mineral Exploration Group, aka MEG, and also senior consultant with and manager with Stantec. And Al, delighted to have you. Take it away. Thanks,
Mark. Alistair, first question is for you. I've got a question about the Talbot agreement with Hudbay. With Hudbay's exercising its buyback right of 2% ownership interest, has Hudbay indicated a potential production timeline? And is there an understanding of what Rockcliff's pre-construction capital obligation might be? Alistair, your mic's not on right now.
Thank you, Al.
No problems.
As to the project timeline, they've shared with us what's in the public domain, which is they've got a lot of success with upping the throughput through the Stall mill around Snow Lake. They've obviously announced very successful fundraising through the gold side to convert the new Brit mill that they purchased a few years back. So they're going to have a lot of milling capacity. And our understanding is that the mines were somewhat bottlenecked by the mill, and it looks like the mine capacity of the existing mines will be depleted earlier than they might have suggested. So it would suggest to us anyway, the potential for satellite mines such as the Talbot that they now control could come a lot earlier into production than you would have thought from their previous outlook. We don't have dates, but we think there's upside from what people might have known a year or so ago about it. And the second piece on the capital, one of the reasons we like Hudbay as a partner is that they're very actually capital efficient on bringing projects into play. So we'll have to see if that same moves for the Talbot, but it would appear that the level of study required will be well within our means should we choose to maintain our 49% to fund our way through the discovery, the study phase rather. And we would anticipate it being, I don't want to put money in Talbot's and Hudbay's mouth, but well within what we're capable of funding. So it won't be extensive studies that would force us to be diluted unless we should choose to do so economically.
Great, thanks, Alistair. Ron, a question came in from the chat board. Please address the specifics regarding the rezoning petition submitted, if you could please, and how likely would it be approved? And as well, are there any other examples of rezoning approvals in Maine that support optimism?
Well, I'll answer the last part first. We're the first in, plus 25 years to go through the hoop. Because we're in an unorganized territory, which is basically in the bush in northern Maine, even if we wanted to build a lumber mill, we would have to rezone for a lumber mill. So it's a classic land use rationale. We effectively, included in our application the guts of a PEA, less a mine plan, which is why we're putting a PEA out in the coming weeks, because the bulk of it was done. And so that's the requirement of the application. Then it's up to a commission of really 9, retired business people that form the committee of commissioners. They decide based on the merits of the project, which include scientific reasoning, social issues. We've basically submitted on geology, soils, hydrogeology, etc. It's like a mini mining permit process, and they eventually have to decide whether it's a proper business decision for the state. And we will face a public meeting, just like we will with a mining permit. So to us, that's why I'd said if we get through the rezoning and we're approved, the mining permit is really the same thing, except we're using a full feasibility and a full baseline study. So far more detailed, final engineering, etc. But, we're going to see any activism, if there is any in the state, from, with the rezoning. And so far that's been fairly minimal. It's been the classic, Maine is worried about the water, which is typical. And we're designing a small footprint underground ore body with net zero discharge of water to the environment that's not the same quality as the groundwater that's there. So we're very comfortable that we're going to meet all those regulations. And it comes down to how, the townspeople, I think, are going to far outweigh, the activism, which typically will come from the big city. We've got huge support from all the local communities that want to see this happen. So we're pretty confident.
Great. Thanks, Ron.
Yeah.
Max, in the news release today about the Rainbow discovery, Callinex mentioned that the exploration team utilized a multidisciplinary approach that facilitated the discovery of the additional silver mineralization that you mentioned. You got into some details on the geophysics that was used. Can you expand on this for us, maybe discussing what some of the other methods used as well?
So the multidisciplinary approach is what we use across the portfolio. The silver discoveries was what we announced in New Brunswick about a month and a half ago. So in terms of the silver discoveries we made in New Brunswick, that was using a regional IP survey. That was also using some historic soil sampling and then some groundwork that we did leading up to those 2 discoveries along that controlling fault. Now, in terms of Flin Flon and re-entering Flin Flon, we've taken a completely different approach than historically, which in these mining camps like Bathurst and Flin Flon, it's heavily relied on ground EM. Now, the issue with ground electromagnetics is it does an excellent job of vectoring towards massive sulfide mineralization. However, the mines in Flin Flon, as everyone else probably peers here with me today can attest, have a very small strike extent, and they're usually typically on average about 10 meters wide. So your footprint for a massive sulfide mine that's vertically plunging is quite small. So you're really limited at the depths you can make a discovery and how to do that. So what we did differently is we did an IP survey to vector towards a disseminated sulfide halo that would be in close proximity to a massive sulfide deposits. And then when we drilled and tested those chargeability anomalies, as well as using physical rock property testing coinciding with that, we then used borehole EM to directly vector towards the massive sulfides that we hit. And so the significance of what we hit today was the anomaly has a 260 meter strike by 600 meter plunge. It's multiple stacked lenses, and the off-hole anomaly is quite significant and occurs between those 2 intersections that was on that slide. And the mineralization we hit was very conductive, and the off-hole was so conductive that you couldn't even see an in-hole anomaly, which to us suggests the potential that this mineralization widens and or merges. Those 2 lenses actually merge to the north. And then in terms of readings, it has like a 80 millisecond tau reading. And the importance of the tau reading is basically how long of a response you get once you charge the earth or probe the hole for that conductive source. And that's a tau reading that you typically see at Lawler, for example. Alan Valls, or one of our team members, won the Bill Dennis Award for the Lawler discovery. But what's unique about that in the Chisel Lake Basin where Lawler was found is that it's a higher metamorpho system. Therefore, it's higher temperature and you have more purotite. And all these VMS deposits, predominantly in Flin Flon, are very purotite rich, but our discovery hole is actually very low in purotite because we're in a low metamorpho system. And therefore, we believe that the off-hole mineralization is going to represent an abundance of chalcopyrite and pyrite because that's really the only thing that we've hit now that can explain something that conductive off-hole.
Okay, excellent. Thank you, Max. Alistair, back to you. I've got a question about the Copperman property. With the defined historical resource on the property, has there been historical exploitation of the property? Has it been mined previously? And one of your slides mentioned the plan for an exploration campaign in 2021. What data has Rockcliff been able to acquire for this property to expedite prospect targeting? Oh, your mic's off.
There's been no mining previously on the Copperman and property, which is why we're somewhat excited by it with that 250,000 tons at over 5%. Makes it one of the higher grade deposits in the region for sure. And you know, we haven't put a date actually to when we want to step onto the property to do our first pass exploration. We've done some geophys on there to help us define some targets. But we're waiting for our PEA results on our mining methodology for these narrow vein, steeply dipping deposits so that we can better target our exploration program. So as those results come out, we'll probably see us announce a stepped in definition phase for that, where we outline a prospective target, check current grades against historical, and then build it up to a model that we know will meet our mining methodology. You know, there was a reason that these deposits were largely discovered by Hud Bay and then let go, is because mining methods currently don't make a profitable mine these things. And so, you know, we see it as an important role for the mineral resource industry to figure out how to extract what's in fact 11 million tons of really good grade stuff and turn it into copper for our society at large in really good way. So that's the next phase for us, is check it against the mining method and explore from there.
Great, thanks, Alistair. Ron, the entire 30K belt, kilometer belt, would appear to have had limited work completed on it. Can you describe how Wolfden is assessing the belt?
Yeah, like first off, this was a classic geochem discovery by Getty Oil in the 80s. They were taking, you know, sample lines 1 mile apart or 1 mile centers, and they got a high lead zinc kicker on the deposit. And they did very limited work after they drilled off the deposit. We've got some old data to see where they worked, and they did do a pretty rudimentary airborne survey back then. And even the geology map is circa 1950. So it's a really underexplored belt, and that's why we're excited about, you know, over time we're going to find more ore bodies. You know, we don't see Jim Piquel on here, who's part of one of the groups here. You know, Jim has told me, like others, like you typically find these deposits every 5 or 6 miles along structural breaks. And, you know, that's why we flew the whole 30 kilometers, is because we think we're going to find other ore bodies here, let alone other lenses. It's just because we're getting such high grade. Like even yesterday, we announced a hole where we hit 44% zinc equivalent right at the edge of the western lens. So totally caught us off guard trying to extend the western lens, and we hit a record-breaking hole. So there's a lot more to come, and I think the market is waiting for us to find a new lens. They're totally disregarding we've got a mine in the making, and so we've got to, you know, you asked me about permitting. I'm glad you asked me about exploration, because we're really about exploring and making this bigger, and hopefully we get to build it. But I think the odds are pretty good here we're going to find more.
Great, thanks, Ron. Max, a question from the audience. What is the target in Newfoundland?
So in Newfoundland, that's a third discovery. So again, the Nash Creek was discovering, you know, silver mineralization in a completely kind of different geologic environment. Flin Flon is about making a discovery to really save the town and the community that's been mining in 100 years. And the discovery that we're working on in Newfoundland is actually our Point Leamington deposit. Point Leamington was a gold, copper, zinc resource that we acquired from Newmarket Gold. It was their actually IPO asset prior to them to diversifying into Australia, and then later getting taken out by Kirkland Lake. It's a historic resource, roughly 484,000 ounces of gold alone, as well as copper, zinc. And we got flagged by the BCSC, and oftentimes you don't want to have that happen, but it was the best thing that could ever happen because we acquired it in 2016. And Tetra Tech had published a resource on it in 2013, and then there was a little bit of a rule change in 2014. And Tetra Tech didn't address those rule changes when they published the resource and updated it for us when we acquired it in 2016. Now, serendipitously enough, that allowed me to spend a bunch of time reviewing what work was done and where things stood. And there was a lot of glaring errors in that resource estimate they had prepared. The largest of which is the Point Leamington deposit is actually widest at surface and peters off at depth. And they had modeled it as an underground resource at a 4% zinc equivalent cutoff grade. And to give you an idea, your cutoff grade for an open pitable zinc resource should be between a 1.25 to 1.5% zinc equivalent cutoff. Another error that they made was they didn't model in these dikes that are waste rock that cross-cut mineralization, which is critical because that'll increase your tons but drop your grade. So about 3 or 4 other errors, and that's all culminating to an updated resource. It's going to be a pit-constrained resource. We've also taken into account metallurgical losses on that mineralization as well, which was always assumed at 100%. And net, I think ultimately we're going to come out of this looking pretty good, particularly on the backdrop of higher gold and copper prices moving forward.
Great, thank you, Max. Alistair, I have a question about the TGR discovery that Rockcliff made at the south end of the Tower project. You mentioned that the TGR prospect contains other platinum group elements that increase the nickel equivalent from 3.8 to around 5%. Can those other platinum group elements be effectively extracted through the current setup at the Bucko VMS mill? And is this part of the current metallurgical optimization study that you mentioned was underway?
So the first thing that you want to know about the TGR is that somebody said caught off guard or caught by surprise. That was us. We were looking to extend the copper mineralization following some ground EM, and we went through ultramafics rather than the volcanics. So it's clearly part of the Thompson nickel belt, and it's hard to tell where those two are merging beneath our Tower property. So it was certainly a surprise for us. But yeah, we've had a quick look at the mineralogy that came up in that hole, and as you said, it's pretty rich in the OPGs. And we haven't done any metallurgical work, but looking at the mineralogy, there would be no issue for us to recover that into a nickel con through the Bucko mill. So it could form a very viable part of our future should we discover anything further down there. But as you know, we're primarily focused on the copper Tower resource at the moment, but we will be taking a look at extending that further, and it'll go through the Bucko mill, we believe.
Great. Thanks, Alistair. Ron, with the high grades of the ore at Picket Mountain, has Wolfden investigated trade-off studies of hauling the ore to another operation to save on capital expenditures? If so, can you elaborate on this a little bit more for us?
Yeah, really, that was probably the first choice getting into this, because I think everybody, being the first guys back in Maine, everybody's first question is, are you going to get a permit to build a full operation? And because of that explanation on 30 kilometers, we'd naturally like to permit a concentrator and have a central facility because we think we're going to find more. But we initially thought that there's a lot of low-grade zinc equivalent tonnage, call it 9% around Caribou, that Trevali's got, that we thought, gee, if we add our 20% to it, it would really unlock a lot of value around Caribou. And it's about a 300-kilometer haul. There's no issue taking the direct shipping ore with maybe a minor amount of concentration right to Caribou, crossing borders, etc., not an issue. So that would be plan B to soften the mining permit application in Maine. And we'd probably give up about $70 to $80 a ton in hauling it. but at, call it $500 a ton, we've got lots of bandwidth. The alternative was we put it on a rail car, which is not far away, and we send it over to Belmat, which is now the Empire mine of Titan. And again, they've got a lot of buffering capacity because it's a limestone zinc deposit for our higher sulfide ore. So those were two likely scenarios. And the third would be we just put a permit in eastern New Brunswick. There's places in there we could fit in a concentrator and a tailings facility. But all that aside, after going through 6 months of rezoning, I'm pretty confident we're going to get this dry stack tailings through the hoop, because we really can show a net zero discharge to the environment, and with such a small footprint, in an area that's got nothing but great soil and rock and trees and no people, I think we'll get it through. But there's still very good alternatives.
Okay, thanks, Ron. Max, a question for you, kind of about the local communities around the Nash Creek property. How is the property or the operations being viewed, and what sort of community engagement is Callinex implementing?
So in terms of communities, the Nash Creek deposit actually sits on some private property. Private property, we own about a third of the existing footprint of the Nash Creek deposit. And then with that, we've engaged all the property owners in the community. They all signed contracts with us. We remunerate them for any kind of cutting we do on their ground, as well as putting a drill pad on there. And that's to the northern part of the Nash Creek deposit itself. To the south is on Crown land, and there's a local First Nation community that we do keep apprised of our developments, but we don't really start engaging the First Nations in New Brunswick until we get to a development stage situation. So that's the layout in New Brunswick. Obviously, in terms of overall community support, there is a large community support. Pre-pandemic, the unemployment rate in Lorne and Beldoon was over 23%. And that was before Glencore announced they were going to shut down the lead smelter that I mentioned was in Beldoon, that accounted for 60% of the jobs. So this is, again, we call it purpose-based exploration. And we are exploring in areas that we think can have a big impact on the local communities, and the communities are very supportive of us. Also notably in Flin Flon, we've got a lot of support.
Okay, excellent. Thanks, Max. Alistair, a question from the audience. Can you speak to the timing of the preliminary feasibility study? Has that changed? Is it still on track?
Yeah, it's actually a preliminary economic analysis. It's not quite going to make the PFS level of category. We don't have enough indicated resource to put in there, but we're certainly spending time putting more engineering in that we originally anticipated because of the new mining method that we're developing. So we're answering very specific rock engineering concepts for stope stability, etc. And we're also making sure that we understand fully the new tailings facility, existing tailings facility be changed to a copper from a nickel deposit for environmental permitting. So that's taken us a little longer than expected, but I would envisage still before the end of this year that we would be comfortably placed in putting our PEA out for publication.
Okay, excellent. Thank you, Alistair. Question for Ron. I noticed he just might have disappeared. Just in case he hasn't left, I'll ask the question and maybe he'll tune in. Ron, the Wolfden presentation shows a grade cutoff with a zinc equivalent value of 9%. Oops, it does say that he left the room. Maybe I'll hold off on this question then. I think at this point, Mark, I'll turn it back over to you. And if Ron does come back on, I'll complete my question. Thank you.
Okay. Well, thank you very much, Al. I think there was probably a technical glitch there. No, he has rejoined. So ask your question, Alan, and then we'll go to the close.
Excellent. Ron, I was getting worried you'd left us, but I'm glad you're back. I was halfway through my question. You get the wrap-up question here for this session.
All right.
So the Wolfden presentation shows a grade cutoff with zinc equivalent values of 9%. When I was looking at the grades, it kind of jumps out that these grades are quite high, quite a bit above cutoff from other systems I'm used to looking at. Why is this grade cutoff so high, and will this grade cutoff be modified for the preliminary economic assessment? Can you speak to that, please?
Certainly. Getty did their in-house unqualified resource, and it came out at just under 3 million tons, standard tons at about 20% zinc equivalent. And because it was an old known deposit and there were some papers out there, when we drilled off deeper, we added essentially another 1 million tons plus. And we thought the only way we could show it was bigger was by keeping the grade the same. So the 9% got us the 20% zinc equivalent, and we got 4 million metric tons. So we added about 25% by drilling deeper on the west lens. As a call it a snapshot for being here, we'll disclose that we're using basically a 7% cutoff in the PEA. And if you look at our resource table online, you'll see that that gives us about a 17.5% zinc equivalent and 5 million tons.
Okay, excellent. Thanks, Ron.
Yeah.
And thanks to all the presenters for fielding my questions. I appreciate that. Back over to you, Mark.
Thank you, Al. Thank you to our presenters. We at TakeStock, we wish you a lot of success in the field, and especially while this good weather holds across the country. So Alistair Ross, CEO of Rockcliff, RCLF, Ron Little, CEO of Wolfden, WLF, and Max Porterfield, CEO of Callinex, CNX. Thank you, all of you, and to Al Turner of Stantec, our moderator. And to you, our attendees, thank you for your time today. Do go to today's company's websites, learn more about them, and check in at TakeStockLive.com. In the meantime, be determined in your due diligence and ask tough questions. We'll be back next week with companies on the tech space, and every Wednesday after through the end of October. Mark and Raj signing out from TakeStockLive.com.
Thanks, everybody.